right, Sally. SARS are collecting about 1.6 trillion rand, and it could have been more if, amongst other issues, load shedding wasn't a sticking point, not just for SARS, but for many other companies operating in the current climate. So Eskom recently released its interim results for the 6 months ending in September. They show a drop, rather, in the earnings due to various challenges. But it's not all doom and gloom, according to the company, as the report also indicated that the group's unbundling is on track. Joining me now to unpack this further and give us some insight into his appointment as acting Chief Financial Officer is Eskom's Martin Buys. Thank you very much for joining us this evening, Martin. They were a little late, the results, but they are here, and we are seeing the performance of Eskom in that particular period. A couple of challenges that you all dealt with that drop in earnings, but maybe just give the viewer a sense of some of the biggest drags that were contributing to that period that you reported on.
Okay, good evening, and good evening to the listeners, and thank you for that. Yeah, I think some of the big issues that impacted Eskom's this year, the EBITDA number was 44.6 billion, and for this year we're reporting an EBITDA number of 38 billion. The net profit after tax for last year, the same period, was 10.6 billion. And we now reported a net profit after tax of 3.8 billion.
So I want to also then weigh in on the unbundling that you also speak about quite extensively in that report. Where exactly are we, and what is Eskom communicating when you say we are on track with that particular process?
Look, in terms of the unbundling, Eskom has signed a merger agreement way back in 2021. And in terms of the merger agreement, there was 4 suspensive conditions that we had to comply with. Now, the only 2 suspensive conditions outstanding is the issue around the licensing itself. Eskom, or the new transmission company, South Africa, has applied for the license to NERSA. NERSA is having a public hearing on the 11th of April, and then it is now up to NERSA to decide when they will issue the license to Eskom, or to the new transmission company, South Africa. The second suspensive condition was we need lender consent. And I must make it clear that we only need consent from some lenders and not all the lenders. And we've gone through a process last year already, and the lenders have said they first need more information regarding the debt relief. And we've already contacted all the lenders, we engaged with all the lenders, and we've issued them with letters requesting their consent. So those are the 2 outstanding matters that we have to deal with before we can start with the unbundling transaction.
Yeah, and I'm glad you bring that up, because I wanted us to get into that. The report obviously still includes that full debt burden of yours, over 400 billion rand. Tell us about when that debt relief bill will be signed into place, the conditions that National Treasury is going to be giving you, and if any of the money that will be coming in terms of operational capital will be going into generation, because that's also a huge issue for Eskom at the moment.
Thank you. So what National Treasury has said is they will make 254 billion rand available to Eskom over the next 3 years. And in terms of that, they said they will make 184 billion available in cash over the 3-year period. And they have staggered at 78, 66 and 40 billion. And that money Eskom can only use to service its debt. Now, servicing the debt is 2 components. It's the principal as well as the interest. And then at 31st of March 2026, they will also take over 70 billion rand worth of debt. Now, that still needs to be finalized, which debt they will take over and what exact amount they will take over. But then they've also put some conditions to Eskom. Now, there are a few conditions, but the 2 major conditions is that Eskom can only spend capital on its transmission network and its distribution network, which is required. And in the case of generation, Eskom is allowed to spend capital to finish Medupi and Kusile, and that's not a lot of money that is remaining, and then to spend on the outages of the existing coal plant and all the rest of the plant as well. So that means Eskom can now go ahead and do the maintenance. And Eskom is not allowed to spend any money on any new greenfields generation projects. And the other major condition is that Eskom is not allowed to enter into any new borrowings except with the permission from the minister himself. So those are the two big conditions. There are some other conditions as well. For instance, any sale of non-core assets can only be utilized to service the debt. And then Eskom can allow salary increases, but it should not impact Eskom's financial performance. And then what will happen is Eskom will apply to National Treasury. National Treasury will make the funding available once the debt relief bill has been enacted. And then once Eskom has got the money, we will then service the debt. On a quarterly basis, we will provide National Treasury with a compliance report. And then if they are then comfortable, we will then be able to convert the loan into equity.
And hopefully we
so
get
that's
those.
basically how it goes.
Yes, my apologies for coming in there. Hopefully we get the timeframes on the finalization on that of that process soon, Martin. I want to stick with matters around National Treasury now and focus on an announcement that was made by National Treasury earlier today that Eskom will be exempt from disclosing irregular and fruitless expenditure as is required by the PFMA. I want to know, what exactly does this do for Eskom? Why is it necessary that Eskom be exempt from disclosing any irregular expenditure going forward?
Thanks for the question. Look, in the past, what Eskom had to do in terms of the PFMA is report in its annual financial statements the irregular expenditure, fruitless and wasteful expenditure, as well as losses due to criminal conduct. And that was quite detailed reporting that you have to report in your annual financial statements. National Treasury has then early in January issued an instruction that said in future you will report the PFMA in your annual report. And in the case, it is, in Eskom's case, it is the integrated report. But what you had to report in your annual financial statements is the irregular expenditure and the fruitless and wasteful expenditure for the current year and the comparative year. So what this ruling now has done is said to Eskom, you don't have to report the irregular expenditure and the fruitless and wasteful expenditure in your annual financial statements, but you're going to have to report it in your integrated report. The benefit to Eskom is that from an auditing process, the auditors will still audit the expenditure itself, but they will now not have to report on it in terms of the annual financial statements.
That's very interesting, Martin, because one would then ask what is the big difference between the financial statements and the integrated annual report, and why not just leave it as is the status quo, if you will, very briefly, before we wrap up our conversation?
Okay, in terms of the annual financial statements, what happens is the auditors will audit the financial statements. They will then express an opinion on your financial statements. Now, the issue that we had with the PFMA reporting is that Eskom had to go back many years to identify irregular expenditure. So we've done a complete exercise. But the auditors has always said, how can we rely on the opening balances if we have not audited that in detail? So therefore, they qualified Eskom's financial results every year. But by moving it into the integrated report, and the auditors don't express an opinion on the integrated report, it means what the auditors will now do is they won't qualify Eskom in terms of the PFMA. They will still do the normal audit in terms of international financial reporting standards. And if there's any issue with that, they will then still have to report on it in Eskom's annual financial statements.
Okay, thank you for that clarification. And then finally, a risk report, which we were just talking about earlier on with energy analyst Chris Yelland, the likely risk on load shedding for South Africa for the next 52 weeks. We had a graphic up, Martin, a lot of red, which means that there's a lot of power cuts that South Africans can potentially anticipate for the next year or so. As the Chief Financial Officer, what is your immediate plan in this space to make sure that the capital that Eskom does have goes to preventing all of this red that our viewers see on the screen now?
Look, we have just completed our outlook, our financial outlook for the next couple of years. And with the debt relief that government has now provided to Eskom, what it allows Eskom to do is to use its cash from operations specifically to fund its capital program. But what we've also done is we've also made sure that in our budget process itself that we allow a sufficient amount of funding if in case we have to run the open cycle gas turbines, both Eskom and the IPPs as well. Obviously, the price increase of what the regulator announced recently, the 18.65%, will assist Eskom very much in managing its finances. So we are fairly comfortable that we can assist by running the open cycle gas turbines when we need to do that. We will not be able to fund it completely, and we will manage the liquidity on a day-to-day basis as well. We have to provide anyway to National Treasury our liquidity position on a weekly basis.
Thank you very much for that, Martin. And mentioning that 18.65% increase, so that came into effect on the 1st of April, that is out of our pocket straight to you, and hopefully, Martin, you and the rest of the Eskom team can prevent that risk analysis that we've just shown to our viewers there. Thank you very much for joining us. That is the Acting Chief Financial Officer at Eskom, joining us to speak about their results, but also some of the challenges and what the immediate plan is to deal with them. With that, this is